What is going on, everybody? This is S Trades, and in today's video we're going over another weekly recap. This week we'll be going to go over the week of January 19th to January 23rd, and without further ado, let's get straight into the video. So not gonna lie, this week was a little tough for me. I did break a few rules and I lost some unnecessary trades. It was a little too emotional for me this week, but starting off with Monday, we had a bank holiday and I didn't take any trades, but there was a very clean opportunity, surprisingly, on a day like that. We had a very clean inversion over here. We had a 5-minute inversion and a continuation after we swept London low, and we kind of rallied up for the rest of the day. This was pretty clean trade, but again, I just didn't even want to look at the chart during a bank holiday, so I completely skipped on it. Starting at Tuesday, we did have a very big new week opening gap, and I said it was pretty short. I was bearish for the day, and we dumped pre-market, and I want to see price retrace to equilibrium and the 1 hour to get shorts, right? So we saw that price was disrespecting bullish and respecting bearish. Although we did have the new week opening gap, we were kind of way too low, and I was just assuming that we would kind of continue with the price lower and then potentially catch some longs maybe below these levels back up to the new week opening gap, right? So taking a look at this first trade that I ended up taking. So what pretty much happened is we tapped into the premium 15-minute over here at market open. We start to get immediate displacement lower. I wanted to see this 1-minute inversion over here back down to this 5-minute below us, and potentially pre-market lows over here, and this 1 hour fair value gap over here. So we inversed the 1 minute over here. The bad thing was that we opened the 5-minute inside of it, and I kind of just took this trade as a discretionary approach, and I took the 1 minute inversion, kind of ignoring the 5-minute. But as you guys can see, I kind of got clapped here. This did make me a little bit like crash out, and I wasn't really in a good emotional state, because I did know in the back of my head I shouldn't have taken this 1 minute, because one, it was a very bad close. That's first of all, and second of all, we were inside of a 5-minute, right? And that is not the highest time frame inversion for my sake, but I took a discretionary approach because I thought after this candle that happened over here, it was a very big displacement candle. I thought we were just gonna dump straight through the 5-minute and come back all the way down over here to these lows and this fair value gap, right? But that was the mistake that I did. And then taking a look at this other trade that I took, right? So I got another one of my alpha accounts that I had. So after we kind of ended up sweeping London high over here, which is also in an equal high, we had a 30-second inversion over here, and we had two very obvious draws on liquidity, right? We had an equal low over here, and we had a 15-minute and a 5-minute all stacked with each other, right? So we kind of pumped up, and I was just taking a quick mech short, right? So I took it. I went break even at this 15-minute, right? So my inversion was this 30-second over here, but you don't see it because it's a 1-minute chart. And then I went break even at the 15-minute and held the rest to the 5-minute. I kind of just took majority of the 5-minute, and yeah, that was pretty much it for Tuesday. And really emotional. I did kind of end up crashing out a little bit, but those are the trades that I took. And then starting off with Wednesday, we did catch a dub. I believe every single person in ICT caught this long on Wednesday. So taking a look at this chart right beforehand, for our bias, I said at first I was bearish because price was inversing bullish PD arrays, but as we took our previous day low and we tapped into this very discounted 4-hour, and then we got this immediate candle up with 200-point reaction off of it, so I kind of ended up switching to bullish. I wanted to see some sort of a continuation at open, because we were already next to the London high over here, and I want to see either the 5-minute or 15-minute to open and get a continuation from there. And as we see over here, everyone, I believe, literally took this trade. So what happened is we did take out London high, but we also opened up a 15-minute below us, so I was fine as long as the 15-minute gets respected. So the condition was this 15-minute, pretty much meaning if we tap into this 15-minute, we start to see displacement back up higher, get an inversion, then I'll take a long setup. But if we close below the 15-minute, then I'm probably going to be expecting the price to go back down, right? So as I said, we tapped the 15-minute, then we got an internal sweep over here, right? So there wasn't really much entries over here. That's why there was no longs on this opportunity, right? And the one thing that's really good that comes to A+ setups is whenever we tap into our like a higher time frame PDA and then we get an internal sweep inside of that fair value gap, right? That makes the trade so much better because now you have a easy internal break-even point and you get the internal manipulation at a at an important PDA, right? So that's what makes the setup A++. And this was super obvious, right? So I pretty much took a long after we inversed this 1 minute over here. Yeah, and you could have kind of held it to however much you wanted to. I just took this trade to this internal high. You could have TP'd anywhere here depending on how much your conviction was in this bullish play. I just took everything at this internal high over here, but this trade ran up like 350 plus points, right? We ran up all the way to the discounted 50 minute and we took out all of these highs, right? So potentially if you're super bullish, this was a potential very good long opportunity that you could have had, right? You could have just kept trailing your stops at the new lows that got created and you would have banked, right? So taking a look at Thursday now, this was a mess. I'm not gonna lie. This was one of my first mistakes that I've done in a while. That was pretty dumb. So taking a look at pre-market, right? So I said bullish bias coming in. We tapped the 4 hour fair value gap over here. We inversed the 1 hour over here. And we kept on pumping higher over 250 points. So I was kind of wanted to retracement to either of these imbalances. We left 250 minutes. We left an hourly fair value gap, right? So I just wanted to get a continuation longs from there. This is a note that I put after the whole session came through, right? So I said, no, after this happened, expect chop when we display so much pre-market, but it did look bullish. So I was leaning towards longs, right? So whenever we pump up or dump a lot of points pre-market, New York session kind of tends to be a little choppy and not really deliver as much. It kind of just gives you like a seek and destroy conditions, right? So man, this was pretty tough. I'm not gonna lie. I took 3 trades here. So taking a look at the first trade, right? I usually don't enter off of like very premium trades in terms of, for example, longs in this case, right? So we see here is, right, market pretty much opened lower, right? We tapped the first 15 minute, which was this one over here, right? So as we tapped this 15 minute, we opened a 5 minute above us and we kind of immediately inversed this 1 minute with a big displacement candle, right? And I pretty much just took this long. Honestly, it did look good, but we had a lot of imbalances below us. We had a 15 minute and hourly. So the mistake here was I usually don't take longs this high in a premium, but just because of the way the candle closed, like we literally had this massive 1 minute candle kind of close up higher, and I just kind of, I wouldn't say I FOMO'd into it, but I really thought the price would just kind of shoot right through this, all of these highs and stuff. So that was kind of the mistake here. I should have just waited until we hit either this 15 minute below us or this 1 hour fair value gap, right? So that was the first mistake. So the second trade, this was kind of, again, a discretionary play. This is another mistake that I do here and there where I just reverse my position, because if I, for example, enter a long here, right, and then starts disrespecting it, obviously what happens is we're going to probably go down lower. So I would kind of inverse the position. So I said this was pretty much just fully discretionary. We failed to displace higher, so I thought this PA has been choppy and weird. Now we'll go lower, which it did. I did take this trade over here after the first loss and it held all the way to the 1 hour below. So pretty much what happened here is, right, we re-inversed this 1 minute and I kind of was just waiting on to see how price reacts to it, right? We left this big massive wick over here and then we kind of started to close back down below it. So this was just fully, I'm not gonna lie, discretionary play. So I was like, all right, I think we're just gonna go down lower, so I'm fine with risking it. I put a very tight stop loss. I made my money over here, right? This isn't really my strategy. This is just kind of a discretionary play, which is what wasn't good about this day. And then here, this was kind of a little bit of a mess and I got greedy. So after I was up on the day over here, right, we tapped that discounted 1 hour, which is this one over here. That's like the last sort of kind of PD rate in this leg. So I was like, okay, we're at the lowest point possible, but I was kind of thinking to just hop off for the day because I already took my win, right? And pretty much what happened here was we had a 3 minute open up, right? So right as we tapped the 1 hour, we start to see a lot of wiki reaction off of it, right? So pretty much when we have these candles, you want to call them doji candles or morning stars or whatever they call, right? And we see that buyers are kind of starting to hold this level. So I was like, all right, this looks pretty good, right? Out this 1 minute, you could have taken it, but we had a 3 minute up over here. And so I was like, all right, the highest time frame at the moment was 3 minute, right? So I slapped that 3 minute. again, now we also open a 50-minute and the previous 5-minute, right? So I was like, all right, I think we potentially now are gonna go up a lot higher, so let me take this trade, because in my head this was kind of an A+ situation that I was initially looking at, and I was like, if I don't take this trade and it plays out, I'll be mad, which is kind of not the best thing, because I should have just got off right after this when I was up a decent amount on my fondage, right? So I ended up taking this loss, right? And then that just kind of really messed me up mentally, and I was super emotional because I knew I shouldn't have taken this trade. And then after taking another look at this trade, right after I journaled and stuff and I went back on the charts to look at it, I didn't see that there was a 4-minute also in this leg, right? So I don't know if you guys have watched my bootcamp yet or not, but my entry model is pretty much the highest time frame inversion in the leg, right? So if you take a look at this leg, right, so whichever highest time frame inversion in this leg is, that's the entry that I'm going to be taking, right? So anywhere from a 1 to a 5-minute, and in this case, I thought at the moment the 3-minute was the highest time frame inversion that could have happened, but there was actually a 4-minute also right above it over here, which I didn't really see. So that could potentially be the reason why I failed. But yeah, that was kind of a mistake on my part. I was back down on the day, and I was not good, right? And finally, Friday, it's a break-even day that I had. Not the best week this week, to be honest. Like, I was just a lot of mistakes made, really emotional. And yeah, so taking a look at Friday, right? So for our bias, I said we're looking bearish for the day. We inversed the 1 hour after sweeping this internal high. We rebalanced the 1 hour, and now we're looking that we're going to respect it. I'm leaning more towards bearish plays towards this daily gap over here, right here, and the 1 hour below us. But if we just kind of dump at open, and I'll probably start looking for longs afterwards. This is again another note that I said after the whole session ended. So I said after the whole session happened, here's a few notes. After times like today, we see prices super choppy because we're not really delivering and we're not really meeting any objectives, because we see that we're taking out highs and lows and we're not really delivering to a certain levels that we have, right? We had low resistance liquidity over here. We had low resistance liquidity on the upper side also. We just kind of took a very decent internal high, but we left the previous day high over here, and then we started kind of come back down lower, right? So this kind of is looking like a very choppy range day, right? So I said, after kind of just did all this, don't expect a good delivery, so stop expecting good price action. On times like this, I should be just sitting out. Today and yesterday wasn't supposed to be any trading days. And taking a look at the first trade that I ended up taking, this was also pretty bad, I'm not gonna lie. This was supposed to be a break-even kind of day, but I ended up losing on it because I kind of carried out the Thursday's loss towards Friday, and that messed me up super. And so looking at this, right, so it wasn't really a terrible trade, but it's definitely not A+, right? So we took out a pre-market high, but we left another high above us. We had low resistance below us, low resistance liquidity over here, and I was more convinced that we had to go lower, but that was my mistake because I completely could have avoided this L. Price swept and had an immediate reaction back lower, and we inversed these two 1-minute inversions over here. So I entered off of this candle over here. Then I got stopped out at my first stop was kind of this first minute. Sorry. So as I took this entry, right, as these two 1-minute got closed, I had my stops above over here, right? This was just a kind of psychological number for me. Like, this is the max amount I should have lost. And as we started to kind of dump lower, I just for some reason trailed my stop loss to this fair value gap. That was like one of the dumbest things I could have done here, because this was never supposed to be an L, because I was supposed to go break even at this internal low, right? So as we kind of tapped that 1 minute fair value gap over here, we started to get another reaction off of it, and I just really was like, yo, there's no way, right? So I kind of just made myself lose for no reason. So I kind of re-entered this trade, and as price tapped into this 1 minute over here, I re-entered. I went break even at this internal low, and I got break even. So the first trade never was supposed to be an L, but rather just a break even. I traded my stop at that fair value gap, which is a mistake. It was a fully emotional trail, so there was no reason for me to trail my stop loss over here. Should have just fully accepted the risk, but again, I just carried out the Thursday's L into my Friday day and just not thinking straight, right? So, and this was another fully discretionary play. I just took a lot of discretionary plays this week, which I'm not sure why that happened, right? So as I started to say why today wasn't really good, I mean why Friday wasn't good price action, because we kind of wanted to deliver lower. We left all of that after, and then we just started to kind of pump up massively high, right? So then this is very inefficient for us, because we kind of inversing one side and then we're re-inversing the other side, and it's very, very confusing. And in times like this, price is not really going to be the best, right? So I said price then proceeded to pump up with a lot of displacement through all of these highs. So I switched bullish and literally took a random discretionary long. It did work out. I got a small amount, but back, but I was still kind of down on the day a little bit. This was pretty much a bad trade. There was no strategy for myself over here. We had a 5 minute below us. This is literally just a fully discretionary play, right? We kind of started to pump up a lot higher, right? A lot of people took this long over here and they lost on that, and the price kind of kept on pumping. I just took this trade right here where we kind of retraced, and then we started to see a little reaction back up higher. So I took this long, got a little bit of profit, and we kind of ran up a lot of points higher. Again, this was super discretionary, not the best trade to be honest. But this on the other hand was an A+ setup that we had afterwards. So as we see over here, we had a lot of low resistance liquidity left after we kind of went up all the way over here. So this was my fourth trade. What I said was this was an actual good trade. Price kept generating low resistance liquidity above us. Then we opened a 5 minute as we came down lower to this big 1 hour fair value gap, and we kept retracing and sweeping internal lows. We opened this 5 minute, which is now count as my mechanical long. I took this 2 minute long right after we had this internal sweep. So I was looking to take the trade already over here, but we didn't get a reaction that I wanted because we had this big massive 1 minute fair value gap that we did not inverse, but we had this internal sweep afterwards, and then we had that inversion back up higher over here. So I took this 2 minute and I just kind of trailed my my TP a little bit higher over here, and this is a pretty decent trade. So now I was kind of break even on the day after taking that first loss, right? And I took these two smaller wins. So pretty much key takeaway here is pay attention to the days like today and yesterday. Price took out highs and lows, pretty much chop, seek, and destroy kind of condition. Nothing was super obvious besides this last trade, and it should have been completely avoided altogether. Stay more patient and picky with my trades, right? So whenever you see price like this, right, this is not really the best price action that you should be expecting, because we're again taking out lows, taking out highs, right? And then we're kind of just in the range, right? Don't really expect price to do much. Kind of wait and be patient to see price either sweep out a major low or major high, or start displacing through one of the highs or the lows, and then you can start to be more obvious towards where the price wants to go, right? Because here we swept the internal high, then we came back down, we inversed this 1 hour afterwards. We might not be thinking, okay, we might go higher, but then there's this 1 hour feel like over here, we start to respect it. There's also this all lowers liquidity, and you know, it's all over the place, right? You can't really be super obvious in this kind of a scenario. So in this case, just fully avoid it. Be extra patient for something really obvious like the last trade I just showed you guys. And yeah, that's about it for this video, guys. If you guys enjoyed it, put a thumbs up, comment down below if you guys have any questions. Join my free Discord. Also, a quick note about our Discord. I did just receive recently a few messages from my friends that some person just impersonating me on Discord, sending messages out, acting like it's me, and it had the same exact username as me, but it just had a little dot in it, so people didn't even realize. And people were so confused because I was messaging everyone, pretty much just kind of trying to scam them. And then people send me videos, they were like, yo, is that you? And stuff like that. So that, just a quick note, I will never message anybody on Discord, right? I will never try to sell anything to anybody on Discord or try to like show off my trades or whatever, right? I don't trade individual stocks. I just trade NQ, and that person was sending different like screenshots of whatever, like Apple and Tesla trades. Like I don't trade individual stocks, right? So don't get scammed by these kind of people, right? Just double check your sources. Again, I will never ever DM anybody, especially just trying to like, you know, pull money out of anybody. If I'm offering any services, I'll be doing it like for the public and everyone will know about it. So yeah, you know, watch out for those. And that's about it for this video, guys. I will see you guys in the next one.